everyone. Good morning, SMF M.M.Ts. It's 9:44 a.m. Pacific Standard Time. Today's date is 3/20 of 2011. What this is for the M.M.Ts is to take a look at what the standard public analysis model is about and why the M.M.T model is quite different than the public model. But more importantly is how they're going to make decisions and whatnot. What I will point out to the new M.M.Ts, because you have to know how people are going to make decisions versus the decision processes that you make. So right here, QCOM had put a high in on a weekly chart back on 2/20 at 59.20. This reversal bar is at 59.84 on the high side, and we have pulled back here. The red line is referred to as a 20-week moving average that hedge fund managers and institutional managers will be looking at. In their view, in their world, you're a market maker. Your world's quite different than theirs. But this is how they make decisions at this blue line referred to as a 10-week moving average line. And one of the things that the MMTs, they just know how that big money is going to make a decision on an intraday level, because they make spreads going long and short as a market maker. But we're right here at a very critical level where a lot of that big money is going to be making decisions. The reason why the weekly bar was a pullback bar up here at the top of this range pattern right here. This is called the crown for them. But you had a lot more weekly selling, and the reason why it got back down to the weekly base pattern of 4 weeks here in price action and where we broke out is that we have tested that, and you can see here on a weekly level that one of the processes, process A, is this: a close below the 10-week moving average in their view at 55 is going to be your short-term resistance, because that group of people will have limit orders out to sell into 55, period, at the 10-week moving average. A close below it, when the 10-week moving average is rising all the way up here, then you have this long weekly breakout to these tops here, because that's what they were doing. They were buying up as it was going through. They were making their decisions on that. And as they made their decision process to buy, then that's how the equity went up. Now it's back here at a very critical level for those same decision makers is, am I going to sell some more? If I fall through the 20-week moving average, you're going to break this 50-12 mark right here, because you will. And that's the public model. The public model is that when we go below it, it's very bearish in their view, versus the MMT could care less. They're just there to make a market between the buyer and the seller all day as an MMT. That's our model. Their model is this model. So that's going to be their upward resistance level, is that 10-week. Another thing is, if the 10-week moving average crosses over, starts to go down in value, descending, meaning that the blue line, when the blue line goes up on the 10-week, then you get the public breakout. Public decision models in play. However, when it starts to go below it, you come down to lower price levels to see where they're going to make their reaction. The red line right now is the most crucial thing about it, MMT, because if we start to fall through that red line, that same very public, those very same people that sling 50, 100, 200,000 shares around intraday are going to be selling and asking questions later. So QCOM could come down in value in our market maker platform intraday to a lower lows than what it hit on Friday. This is where it hit the low on Friday, MMT, in the public model. And the thing about it is, what's going to end up happening for these people in that model is that you're going to have a closing price above that red line, that 20-week. This percent DS right here, in their view, that's this one here. This percent DS right here, that's this column. They make decisions on that. You were overbought. Their decision model was that when the equity was up here at 59.84, is that the equity was 96% overbought on a percent DS, and that those bigger volume players are always going to sell that reading right there, no matter what, MMTs. So that when you're working your M.M.T model during the day, you're going to know where the bulk of them sellers are because of it. And you're going to know that the top end of the short in your M.M.T platform is always going to work because of it. On the intraday highs in the M.M.T platforms, there's no way that the equity will continue to consolidate up at these highs, and they would warrant a $60 put option in this case, and we will apply the options trading along with this move with QCOM, is that they're here again at this very critical mass, and that this 20-week moving averages is at $52.07. $52.07. A close below it, and if it becomes new resistance, then you're going to make lower lows where markets would be made in your market maker platform irrespectively. But you would want to know why to be short in your M.M.T platform. It's because their decision process is taking it will be below, you're going to get more downside, and it's going to support your short sell in your M.M.T platform from looking at the public weekly model. So that you know at certain deltas that when QCOM on an intraday level in your M.M.T platform goes up, they're going to test them, but they're not going to close above them, and then you're going to have a reversal, and you're going to learn how to short that side of the tape. That's the left-hand side. The left-hand side of the tape, when they make in their reaction, their decision reactions, is that below it, it's going to trigger more stop market orders, and we get to come down and make lower lows. But it doesn't matter what price that the market is at. QCOM has had a great run in 2010 all the way up here to the tops again, slightly above it, took out the highs back up to 60. You can take a look back in 2008, highs were right here. And even 2010's original highs were right here. So we're right there at a very critical area of where those public decision models are going to kick in. And they're going to kick in that if this last high cannot hold support, well, then we're going to come lower in QCOM. And that's fine. And it would be validated in the M.M.T brain. That's this one here. Let's take a look at it. That's the M.M.T QCOM 3-minute. I will also pull up a weekly chart in this application here, which is your M.M.T platform, and I'll be happy to show you on a weekly level what it really looks like here in your M.M.T platform, because each one of these lines here has already got the public model calculated as to what they're going to do at those lines between the actual buyer and seller, which would be the broader public transaction behavioral tape, behavioral transactions. So we know that right down here in our weekly platform versus a standard one, and these are we did let the blue line is a 10-week, and this one is also a 20-week. And we did put it on here so that you could see in your own platform that you've got the same thing as you got over here. This is what they'll be looking at. And the only reason why we put it on there is so that you would know how to trade against those decisions, and why that crowd of people are going to make those decisions. And that's going to be video A to QCOM, to full respect as to what that behavioral price action is going to happen and why. Why is it going to happen? Well, there's a reason why. And when you know they're going to make your decisions, you know that in your platform, if you can't close above this next delta line, that you would be shorting at the highs using your, this is a weekly chart, but you'd be using this one over here. Once again, you'd go right back over to here, and you are going to be using this 3-minute breakout, this 3-minute reversal, so that you can guide yourself between those decision policies that they have. And that's the standard technical analysis. That is their decision-making policy, by the way. So how do you trade against it, and how do you know what's going to support it when those big decisions are going to be made? Naturally, it's all going to show up in the M.M.T platform at every one of these lines. These are $1.48, one delta movement in QCOM. And you learned on Friday how you got bottoms. We've had a 3-week reversal right along with the broader NASDAQ 100. That's this one here. because it trades in the NASDAQ 100 right here, and it trades in the NASDAQ comp. So when those indexes were failing, then QCOM got shorted down, but QCOM is, you can see the decision process at the weekly moving averages. It created more delta down movements. It created selling. If this red line in your platform, which is your 20 week, if we're not closing green bars above it like this, you know, green bars, then that means that there's more delta contraction, but on an intraday level, they're going to bounce harder because the delta expansion of $1.48, the more that increases, that also equals how we measure price volatility in both long market, short market, and both directional movements for SMF M.M.T debits. And I will stop this video now, but I'm just letting you see what it looks like in our weekly here. And this is a standard chart. This is one of the better ones out there, Realtek, but nonetheless, it's a standard model that institutional and hedge fund managers, those are the ones that we care about. We don't care about the general community. We care about where the bigger money is going to support your move and or where you're going to have to make lower markets, and we're going to do that in the next tape. So a fall below the 20 week. We have a crossover here on the %DS with the 3 week correction. That's all bearish. We were overbought. We're in the 3rd week of coming out of the overbought transition to a more level where if we come down to lower levels intraday, we're still going to bounce off of that bottom to make a market very nicely. So I'm going to conclude the general public QCOM weekly chart, and in the next video, MMTs, as you know, we're going to, and this is our SMF QCOM weekly chart, and everything about what we do is all right here, and how markets are made, and why this platform is great, because what it does is it prices their decision process, it prices in the market makers on the floor, and it does everything. But the special wisdom that the M.M.T gets is how he and she, or he or she or him, are going to make their transactions by understanding the public model, and why you always come out making money and the rest of them don't. Ha. That's the weekly chart. Next video is how we traded intraday. We'll take a look down here. That 47.35 is a major market. There's another major market right here in that delta line. We'll be taking a look on Monday. If we come down, we start to fail through it, then that means that there's going to be more selling that would provide you a short based on the public model and would support it.